Hello, this is John Piper with the weekend video clip, and it's Saturday the 17th of August, and we're looking here at a chart of the Dow. Basically, we've discussed this before. We've seen a peak up here, not 16,000, but not too far adrift in the bigger scheme of things. We've then seen 5 waves down here, 1, 2, 3, 4, 5. You may recall I tested an extreme stop below that level. What actually happened in the event was that we saw this very small penetration, false break, then a rally. Now it looks to me like this could be an irregular A, B, C 2 wave. So that's 1 and 2, then a 1, a 2, and a 3. Suggesting we could see some kind of 4th wave coming in Monday, another 5th wave decline. There certainly is a possibility of a peak here. Yeah, there is a fundamental point, the QE being withdrawn, which is a huge issue for the market. I mean, you can notice the huge rally since it came in. The whole thing is a bit artificial in my view, and the rally is artificial. So stimulus comes away, the rally reverses. It all seems quite logical. The wave patterns are stacking up that way. Bond prices continue to look negative. Interest rates continue to rise. There's a lot of quite negative stuff for stocks at the moment. A rush for the exits is certainly not out of order in this kind of situation. But right now, it looks like we've got a bit more toing and froing to go. If we saw this decline here, that'd be the end of wave 3. Then got a 4 and a 5 to come. This could trace out a similar pattern to 87. I mean, 87 is rather burnt into my mind, as it was one of my earlier trading experiences. But we've got a similar time of year. An initial 5 waves not formed yet, but at the moment the thing is heading that way, as it were. And a weakish rally into September. Then October comes along, and things get pretty unpleasant. No guarantees that might happen right now, though. We have got this pattern developing, and the Dow isn't there yet, but looks negative right now. Let's see what FTSE is doing. Right, FTSE is arguably at a more advanced stage of the process, because we peaked back in May. 5 waves down is clear. Even wave 5 subdivides into 5. This could be a 5, but let's say it's corrective for the sake of this discussion. Having said that, this could be the start of impulsive action, but it could also be an ABC. So, there's ambiguity here, but the 5 waves are clear down here. And this little blip up here, well, it could be a 5th wave, it could also be part of the C wave. So let's actually look at the pattern since that peak. Okay, well, we have a 1, 2, maybe a 1, 2, 3, 4, 5, 4, 5, so it could be a 5th 5 there. This is pretty clearly corrective, ABC. 1, 2, 3, 4. So we can see a bit more downside, make a 5th wave. We could then see a corrective rally. It needs to be fairly feeble, really. I mean, essentially this pattern needs more downside pretty immediately to actually keep it alive and well. Could be an ABC, as I said, A, B, C. But again, given the situation, expiry is now happened on Friday, so the dangerous area is expiry plus or minus 2 days. So there's scope for something dramatic to happen next week. Let's see how it goes. Gold. Right, looking at gold. We have much stronger evidence of a low now. This can be counted as a 5, as I said before. It's not a very ideal 5, but nevertheless it can be a 5. A while back I tested an extreme stop above this high. If you retain that, you're now triggered along with a small profit, nothing very dramatic, but a small profit. Let's look at the pattern of this rally. So this counts well as the first wave, second wave, 1, 2, 3. So there's a much better case. Gold has bottomed now, but still early days. Still could be an ABC. So we'll see how that also develops. It seems a bit strange actually that gold should benefit from QE winding down, because it was QE winding up which actually created the rally in the first place to an extent. But I guess there is the worry that equities are going to fall back sharply. Mining stocks being very depressed, but various things that could be justified. Anyway, nevertheless, the chart pattern looks pretty solid for now. Pound dollar. No real change on pound dollar. Still no clear sign of a peak here. Still got a possible ABC. but we have no resolution at the moment. But the ABC now has the C wave now has 5 waves up, so we could see a termination shortly. We'll have a look at that in a bit more detail. Okay, this is the hourly chart, and you can see the possible 1, 2, 3, 4, 5. So yeah, we could see this could be a 4. One more rally might do it. Anyway, on that note, I'll finish today's report. Hope you found it interesting and useful. Back with the report on Tuesday morning for subscribers. Apologies, my delivery's not been as whatever the word is as usual. Had some rather unpleasant dental treatment yesterday, which I'm still recovering from. Hopefully back on form fairly soon. Anyway, thanks again. Bye for now, and have a great weekend.